All right. Thank you very much, Michael, and my thanks to the CIS team and everyone represented here in terms of the various stakeholders. So mine really this morning is just to just give a quick overview and a couple provocations about where consumers are today and perspectives on data. And so to start, one of the questions I'd like to pose to you is that if African data, quote unquote, was on its deathbed today, what would its eulogy read? And where would we have to start to say that this was the beginning of African data? And I think with that said, we would have to go probably some ways back, probably a long way back. Because outside of technology itself, in truth, data has been present throughout African history, known as oral history, if you like. It's evolved over time, so the transmission of information as we've known it, and to kind of quote-unquote the modern ages. And so if you go back to the 90s, for example, when some of the first telcos were setting up on the continent, when phones cost $2,000+, were notoriously unreliable. There's actually an analogy that a colleague and friends who had a phone back in that day would say when they would go out for a drink, they would actually pull up a chair and place the phone at the table, almost ordering a drink for the device because of what kind of status symbol it was. And that was one of the first ways in this evolution of data as we've known it, not to mention, as we've said, just the transmission of oral history and information as the first version, if you would. And so if we're eulogizing or remembering fondly about the old days of data, it's incumbent on us to capture some of that background and look to present day as we seek to come and share some of the ideas here. One of the key ones that I have picked up on just based off of the conversations yesterday was on the place of just our collective time and attention. So we've really moved towards an age now where there's what I might call two non-renewable resources in the eyes of consumers. And this is part of why they're so willing to provide and supplement conversations with their data, their information, in order to get a transaction, in this case, be that access to finance or access to credit. And so here, this is a quote from Satya Nadella that I'm quite fond of, and what he said here was we're moving from a world where computing power was scarce back in that day with the single mobile phone on the table having its own place, to current present day where we've now gotten to the point where it's pretty much almost limitless. It may not be as distributed across the nation or the continent, but it certainly has come a long way. To close it out, the key part that I want us to take out of this conversation here is the true scarce commodity is increasingly human attention. And so part of what I'll attempt to share here is some questions and ideas around the attention economy, if you will, and how data is playing a key role in that from the consumer's point of view. I can't start without one of my favorite quotes here just to set the table. This is Alvin Toffler, a futurist, and what he said is that the illiterates of the 21st century won't be those who cannot read and write. It'll be those who cannot learn, unlearn, and relearn. And I think here with the people brought together at the table, be they regulators, be they innovators, be they people in the middle, be they protecting the consumer, be they advancing the consumer's interest, data is really the common denominator between all of us, but it begs learning and it begs questions from us. I think throughout Silicon Savannah's history over the last, let's call it decade or so, we've seen peaks and troughs of really innovative ideas that may not have stood the test of time. We've also seen flashes in the pan, if you will, of ideas and concepts that we hoped to take off but didn't have the expected or intended outcomes, be they the next level of mobile money, be they insurance or the layer on top of what you build on top of mobile money. So I know there's a number of speakers today, both from the startup world, the investment world, and certainly from the stakeholders who've convened the conference who can share a bit more. This here is what's called the I think it's the Gartner hype cycle. This talks about our natural desire to take questions like data and take buzzwords or very big and intriguing concepts, and what it calls the technology trigger is where we will begin to just explain the promise of technology, really champion it and evangelize it. And the peak of inflated expectations is where we realize that it can't exactly transform everything. And so that's the point where reality begins to hit for a lot of innovators. For startups, this is perhaps that messy middle or missing middle of getting that subsequent funding. And so what you have there is the trough of disillusionment, which some of us may have been in before getting to the maturity of where we are now, or what's called there the plateau of productivity. So if we take a look at M-Pesa, just as an example, I'm pretty sure we would have to start here. I'll touch on this at some point. The experience around this has not changed in 10 years. It works the same way on a Nokia 3310 that you would revive from the dead as it will on the iPhone 8 Plus or whatever the 10 or whatever the next variant of it is. So for 10 years, this has effectively stayed stagnant in a world where we will increasingly see that the commodities of time and attention are rapidly becoming a point of competition, right? And innovation, if you will, not to use the buzzword. And so if we look at this and compare with the iPhone, not that I'm a big fan of it, this here celebrated, I think, 10 years last year and has evolved and is the same age in principle as M-Pesa itself. And here you see screen sizes, you see chips being developed, you see an overhaul on the back end, and not taking anything away from Safaricom, but purely saying that in the consumer's eye, faster and quicker, while in the latter stages of the iPhone, more protection around data. In fact, we write a newsletter, and one of the quotes we've put in there in the past is how data privacy and protection may become a form of class warfare, where only the wealthy can afford a form of data protection because of the device that they choose, because of the preferences they have, whereas for everyone else, they need to pony up or share their data and trade it for common services and experiences within society. So that's part of one of the first provocations here, and I think something to kind of whet our appetite for the day ahead. I think when we take a look to the contribution that M-Pesa, if you would, makes for Safaricom, these are old numbers here, but it's clear that despite a somewhat static experience over these 10 years, we've seen it contribute more and more to the firm, and that's for a number of reasons. There's specialists here. I wouldn't care to give my perspective. What I do want to take a look at is really on the consumer side around how evolving channels have set and shaped perceptions today about what data is. And so this here looks mainly to social, which I'll share some more about because it's our area of expertise. But I will be looking at three core concepts around data to give us an understanding of the landscape as we seek to engage with the rest of the day. Excuse me. So enterprise data, no surprises here. If you're uncovering trends or patterns within customer communications, this is where to look to. This is buried sometimes within silos, within IT, within the ERP, internally. And this here, in some cases, is being relinquished or shared. And I think there was a provocation yesterday that the industry, the consumer, is the one who needs to shape their data and then present that and allow loans or access to credit to compete based on their shared profile as opposed to having siloed profiles from different providers. Next, social media data. I'll spend some time here because this, in my opinion, has changed some of the expectations that people have of even local services, and I'll share some thoughts on this. And lastly is public online data, so search mainly, the broader internet as we know it. And so if we look to these three, it's where the three meet that the most interesting conversations today and tomorrow can take place. If we look to Facebook, it's by far the most populous social network in Kenya. It's got over 8.1 million users in the country. It is only rivaled by WhatsApp, which in and of itself is not a social network. And these statistics, if you like, are from Nendo and Facebook. We work closely with them and are able to get on a quarterly basis some of the access to the numbers of how growth is and the penetration and mobile to desktop use. And so here what you find is that this is the key place in the attention economy that people will invest their time. And so there's actually been provocative ideas that Facebook owes people potentially a universal basic income, because as a publicly traded company, everyone here, for every minute you spend on Facebook, is investing in this share price, if you will, of that firm, and is providing and mining and really putting in data that they do not get necessarily back in return. So there's been a number of ideas shared on what the future of this means. What we know sitting here is that this, as I'll show you, is the second most visited site in the country, but also a key place that's shaping perception. So when Tala, Branch, a number of others have begun, they've sought this sort of social data, saying that if you've been on for 2, 3, 4 years or more, that this is a place to then benchmark you and evaluate certainly your social capital, your network of friends, and your behavior here, and seek to attribute certain signals towards your behavior and what it means about you if you've got a smartphone and are able to seek credit and use this as some part of the transaction. For Twitter here, this is from Nendo and Crimson Hexagon, and so for us, what we're looking at there is what's about 1.5 million Kenyans on Twitter. It's a fraction of the Kenyan total population on a place like Facebook or WhatsApp, which is estimated at least to be north of 10 million at a very conservative estimate. Here on Twitter, what you'll find is a very vocal and influential audience, but a very small one, mainly speaking in English, predominantly urban or peri-urban, if you like. And that's despite every 9 o'clock news bulletin and many major radio stations almost unfairly weighting Twitter over Facebook or over SMS, which is actually a form of revenue. So they've chosen the data platform that they want to focus on, and that just sets a set of expectations on instant replies, messaging, and access to information. If we look to the consumer side of what they're seeing from at least the banking sector, we can see how social media, despite being a key pocket of information, of data, certainly a key part of the transaction in acquiring credit nowadays for some lenders, is bringing some questions. So for the banking sector, digital and a range of other factors, including the interest rate cap, have led to this situation of what we're seeing here with changes. But what you find is social media in some ways, and I was here yesterday but not to hear the governor's remarks. I understand the motivation around the time of when this was shared, because there is not only the run on the bank, if you take Chase Bank, but there is the actual governance set of issues, and the data we later came to find led to Chase Bank happening. But this information is public, and what this teaches us is that consumers will make their mind up from publicly based information, be it false or true. And on social networks in particular, this habit of either taking you can see someone being arrested there or arraigned, or still choosing to bank with the place, or as you can see above, it being derived as or segmented as the cause of the actual run on the bank. Social media is a key data platform where consumers are expressing themselves and are seeking to use that as a trade-off, if you will, in getting access to credit. To give a couple more examples, this here was just a comparison between what Chase Bank said and what consumers said during the actual time of the fateful week when the bank was put under the administration of the KDIC. And so we've been tracking not only that time, but certainly the users and audience perspective on places like Facebook. So part of why I present this is because if you're a consumer today, these expectations, as isolated as they seem in social media and as undistributed as this behavior might be, the more rural you go, the less you find people spending many of these disposable time or their bundles on digital channels. But those expectations are being manifested in experience, that they expect a similar experience on mobile apps or any other touch point when it comes to accessing or sharing credit. And so that's part of why not only Chase Bank had its learnings and lessons from there, but we come today to be able to see that you can evaluate any player and the state of credit or even the perception of banks purely by taking the voice of customers from social media, from online channels. I want to just reflect a bit on some work we did looking at banks, and specifically the ones here, so these 6, and taking 11,000 comments. So comments are public data. Customers will come and voice their concerns on a public platform and say their regard or disregard for certain issues. They do this for everyone from any of the credit providers to the banks themselves, and in there is buried a set of insights. So you'll figure out what aspect of a particular bank is weakest, and for us we're able to find which of their specific banking products had the highest volume of complaints or volume of compliments, which are more rare. But from this we learned a few things, and those is what I'll seek to close with as I just share with you now. So the first is the highest volume of queries aren't service related, and we can go deeper into that if you'd care to hear. But for the most part, they are just interactions even amongst other consumers when a customer comes to complain, as opposed to about the actual service itself. What we did look at were response rate and response time, and with that we were able to engineer or get a sense on the banks and their ability to respond to consumers. And in this specific period of time, which again is isolated, we learned just about what banks prioritize. They're all fantastic marketers, but on the speaking back to customers and taking things private, we saw some gaps between the actual marketing activities which work well and the actual customer experience or retention activities from them. And this data here is again just a thought starter for us over the course of today. We hear from a number of people, I believe, looking at the program, who can enlighten or share a bit more about this. But this here, in terms of what it speaks to, this is how they respond. And if you're talking about how they market, this here, and the slides will be provided with some references and footnotes. This is what they say to consumers, speaking as many times as 3 times a day in terms of presenting a message, so marketing or otherwise, to customers, or once per day at a minimum. And in some cases they're educating consumers. Many times they are presenting advertising or marketing driven content. Really again a thought starter for us on if you have a volume of complaints that aren't congruent with the data we're seeing from your marketing or the way you educate your consumers, certainly on these digital channels, that's a reputational or trust issue manifesting. The last place I'll pause on is if it is a time and attention based economy, then you must look to where Kenyans spend probably their most precious resource, which is their bundles. And if you are looking for that, you'll find the top 5 most visited sites telling us asking us a few questions. So Google, no surprise there. Android is the default operating system of most phones here. Facebook is second, I shared some stats on that. YouTube is third. Now, we're not the most prolific by any means on YouTube. It's actually, for visual media, it's Tanzania. Their use of Instagram specifically and YouTube broadly is a stretch and a notch above, maybe significantly, especially for Instagram, over Kenya. Now, 4th and 5th are what I'd like you to pay close attention to. Of lending, and you have the 4th and 5th most visited sites respectively, being gaming or sports betting, if you like. You start to see a pattern there. I will show you the rest because it's certainly worth taking a look at. 6th and 7th are adult websites, which, as I said, Kenyans may lie, but their data bundles and where they go don't. So that's clearly it's the state of the nation today. And I'm not a psychologist or psychiatrist here, but it just speaks to just really where Kenyans are spending their time. And this isn't discriminating off of age. This is just the aggregate. You have another sports betting website at 8th place. 9th doesn't count. It's saying it's something within Android phones that loads the internet faster. 10th is Twitter. Now, this tells us that if your experience cannot match or meet the ways and means of how quickly you can be served on platforms like this, there's a question. Secondly, you don't find people necessarily paying for a lot of content here. Much of the content provided here is free. And that also speaks to a broader question of payments and transactions. I think only sports betting is where not only are they consuming the information, but actually placing bets, in many cases using the credit availed and the data traded off of some of the partners represented here today. I'll end with just a quick snapshot of some of the, I've been saying I'll end for a bit, but of the top Android apps. This is a snapshot. It's not the trend for the year. It's the month of June, I believe. And here what we have is, if you're looking, it's Tala, it's Timiza, Okash, really those three there. Facebook Lite, of course, because this app economy does need firms to potentially compete on who can use the smallest amount of space on your phone, and who can respect that idea that these phones are, certainly WhatsApp is expanding in its space, and that your app, whatever the app is probably further up in line to be installed than you may be realizing. And I know we've met with companies who are seeking to do growth who are puzzled by this, but it is one of the intriguing things we found here, just that lending apps lead, or financing apps if you like, credit apps, but social isn't far behind. Towards the tail end of the list here is Branch, Facebook Messenger, AliExpress, and Safaricom. Just speaking again to social communications messaging as key takeaways. So for us, I said if African data had to have a eulogy presented about its time and the ages, that's how I began. And if we're here asking about what's next, I think a key question for us is what WhatsApp for Business brings. This is for us the default social network for the country, but one of the most notorious to get any sort of data out of, having been encrypted. The API is not, we're waiting to see what else it can do, but so far it seems somewhat promising. If Facebook and WhatsApp can work out the monetization model, they seem to have an internal conflict which has led to the founders of WhatsApp leaving, which is still up in the air for members of the public who want to use this as a key touch point, a key platform. What we know, as I've said earlier, is that the question around what data does for us and how it's transacted and invested is that social data is perhaps the most populous. As I showed, every month we have well over 1 million tweets, certainly millions as well of Facebook updates, mainly private, but the public ones, we have the opportunity to have access to them, following all the rules and obligations and documentation that Facebook requires to get publicly accessible data nowadays. But the question to you, I'd say, is what ways are you tapping in to multiple sources of data, and certainly giving the protection and privacy conversation a front seat, because if it's publicly available data, it is accessible, it is available, but if it's proprietary, much like the digital footprints or profiles that credit lenders represented here have, there was a question yesterday on whether you consolidate that and give a unified profile and unified score to consumers. And I think social, in a way, could be one way of leveling some of the playing field with that. So that said, I appreciate the opportunity to speak and to share my remarks, and we'll be looking forward to the conversation and dialogues that follow. Thank you.